Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, May 16th, 2011 is brought to you by Realtic. All right, let's get right into the charts here. We're seeing a market that's basically on the flat line, which is not unusual for a Monday. However, what is somewhat unusual is the volatility today. The market's had a sizable gap down. We surged to the upside, going pricey to the positive side in terms of a nice little gain there. The markets then reversed to the downside and are now hovering on the flat line. And as I said, Mondays usually are a flat day because volume is so light. Volume is pretty light today, but it even is a little bit stronger than usual. Now, the keys in today's market, you have to look at the dollar. That continues to be the number one factor here. And if we look at the UUP, the dollar continues to be very, very weak. And I think that's why the market's actually holding flat. If you had a lower dollar, the markets might be a little bit more to the upside, but if you had a higher dollar, the markets would be selling very sharply. And I think if you look at the UUP here, which is the ETF for the dollar, notice how initially the dollar gapped down. This is where the dollar closed on Friday. This is where it opened today. However, that gap down equaled a lower open in the markets. No sooner did the markets open lower, the dollar sold off, and that's exactly why you got the spiders or the S&P 500 to rally up. Remember, that dollar was selling off throughout the morning session. Look at the market go up here. Now, as the dollar has kind of stalled out and stopped going down, the markets have had a tough time keeping up, and they're actually selling a little bit to the downside. It's going to be a very interesting week for a couple different reasons. Number one, it's options expiration. Generally, in options X, the institutions will push stocks in the opposite direction to make sure that those options expire worthless so they can take the premium as full profit. And remember, it's somewhat of a regame those options. You have to understand that. If you don't understand it, make sure you come and take the free trial of the Research Center here at In the Money Stocks so you can understand how to profit from the moves in the markets as the institutions are manipulating. All right, now again, a couple other things here as the market's seeing a little bit of selling, just down about 9 cents on the SPY. The Dow Jones Industrial Average is actually up 10 points, while the Nasdaq is down 22 points. S&P is just down 60 cents. So we're seeing a lot of technology weakness. What's the cause here? Well, Apple had a key breakdown on Friday, and I want to touch on this. Apple, take a look. Apple Computer had a bullish in spirit of pattern formation on the daily chart. Sharp up move, consolidation. If you've been following these intraday videos or the nightly videos, you should be well aware that the consolidation pattern was not that great. Why? Well, the pattern itself was okay, but the price action inside of that pattern was ugly. What do I mean by that? Well, the market was shooting straight up about 2 to 3 weeks ago, and Apple was going sideways to lower. So again, that's price action that you have to be aware of. When you see that type of thing going on in a stock, it is not a good sign. If the market's going higher and the stock is going neutral to lower, something is wrong. Now, ultimately, what we saw was as long as you were holding these two moving averages, the 20 and the 50 moving average, as long as you stayed above them, it was valid that this bullish in spirit of pattern could see some upside potential, although it was very, very weak. As soon as Friday closed and you got a close below these two moving averages here, that was done. That's a breakdown. That's a failure of any sort of in spirit of bullish pattern, and the Apple chart should continue to go lower. And I'll say this right now, folks. Your target is going to be your 200 moving average. That's what it is. There's no other way to describe it, folks. That is where Apple is going. I think Apple gets there within 1 month's time, maybe even sooner. It's only about a $15 drop, so in all fairness, it could go there much, much quicker. It's actually about a $20 drop, to be fair, down to about 316 to 317. That will be where Apple finds a bounce. I don't think Apple gets a bounce until then. Maybe it has a flattish to update here and there in bearish consolidation form, but nothing better than that. All right, another stock that I think is worth noting here, Amazon.com has now officially put in, assuming we close down in this range on Amazon, a pivot top. All right, so pivot top is in. Notice the down day, reversal day on Friday, the continuation on Monday. That is confirming a cycle change in Amazon's chart. Now, would you short it here? No. I would personally not be shorting Amazon here. Why? Well, because the support level is coming right up here at the 20 moving average. That's not very much distance left. I mean, you're only going to go for that a little bit. Doesn't make sense. Instead, what you do is you play for a bounce. You look for a bounce in the price of Amazon. If Amazon comes up here and fills the gap, if Amazon comes up in here, maybe does a 0.618 Fibonacci retrace, at that point, that's when you look to short Amazon. And at that point, you should have a nice amount of downside. Remember, the cycle has now changed to the downside on Amazon, and this again tells us that even if it bounces, it should be a shortable bounce at that point. All right, and again, make sure you understand that. I would say after the 20 moving average, as you can see, this trend line right here would be your next spot that you would look for, which is right around 191 or so. But nonetheless, make sure you understand what you're seeing on the charts. And remember, there is a 7-day free trial to the Research Center, to the Intraday Stock Chat. Come to inthemoneystocks.com and take it. No obligation, folks. You can always cancel before the end of the free trial. And again, learn these plays. There were great calls out Friday. Let's take a look at some of the calls from Friday. Friday, I sent out an alert to the Research Center subscribers to buy Yahoo at the 200 moving average. Yahoo is up off of that level, actually got as high as about 16.80, a full 85 cents off that level on Friday. It's come back in a little bit today with the weakness in the market, but again, there's a break-even stop there, and as long as this holds here, I still like it to the upside, probably around to this 50 moving average right up here. All right, and it was a great little trade there, still in the money on that trade, and again, this is while the market dumped out on Friday and is neutral today. We're in the money on this trade, and that's after taking it on Friday when the market was getting crushed. Another trade that's been a great one, Goldman Sachs. I sent out a buy alert on Friday for Goldman Sachs right here at a Pierce of 140. The alert went out to buy it at 139.60. At $139.60 to buy Goldman Sachs. It bounced beautifully by the end of the day. Today it's up another 55 cents. We now have a break-even stop after being $3 in the money on Goldman Sachs. And remember, folks, these are long plays in a down market. Why? Because the technical analysis and the proprietary techniques that we do here at In the Money Stocks don't really care where the market's going in the short term. You're playing short-term plays for swing trades. You're holding on to them for 2 days, 1 day, 4 days, a week, 2 weeks maybe. And in the short term, they're going to get those bounces off those master levels. All right, and again, free trial. That's all I got to say right there. All right, what else do we want to see here? Research in Motion's one to watch. I think Research in Motion's an interesting chart. We're not going to talk about that one, though. You have to join the Research Center to get more information on that. Let's take a look at Halliburton. I think Halliburton's a very interesting trade here because if you take a look here, and if you take the lows of the year and just draw it up, you can see we have broken down to the downside below this trend line, and ultimately I think this is first support right down here. And then I think we're actually going to go all the way down here on Halliburton in the not too distant future to this little pivot low support, which is at around $42.50. So good little area right there. All right, after going over a couple stocks here, what we want to do is just recognize a couple other key movers. Google is taking a little bit of a hit today. Nice little double bottom here, but I'm not looking to swing trade this at this current level. I want to see it go lower. If Google goes lower, I would say somewhere in this range is where I'll be looking at it in an interesting way. I think this little pivot area right here on Google at right around $500 would be something of interest, but I'll continue to update the Research Center members on that trade if we decide to take it or if we decide to put out the alert on it in the near future. Intel. Intel has been one of the strongest stocks of late. Today is no different. Take a look at Intel. Look at the chart of late, and again, you can see what the market's done. The market's kind of gone like this over the last couple weeks, and Intel has just gone up essentially, still hovering at its almost 52-week highs. We'll continue to monitor that in the coming days as well, but Intel, very nice day on Intel today. Let's take a look at some of the ETFs for commodities. We know the dollar is lower today, but silver is also taking a hit. Why is silver taking a hit? Because honestly, the support level has been damaged here. You're going to see this come down all the way to the 200. It'll have a minor stop right around here on the SLV at $31, but then ultimately it's going to about 28 to 29 bucks. At 28.29, that's where it's going to be a good little entry on a long play. The GLD is actually up today on a weaker dollar. And again, GLD never had quite as big a run up as silver did, so therefore, obviously, it's probably more in relation to the dollar, and sure enough, it's up slightly as the dollar is down on the day. All right, let's take a look at the USO. The USO is getting hounded again, or hammered. You can see the 200 moving average is probably first support there on the USO. Now, if you're interested in more information, as I said, just join this free trial of the Research Center. Try it out. No obligation, as we always say, 7 days. So joining today is optimal. Get that full effect of the free trial in there, folks. All right, let's go back to the spiders and just take one last look at what's going on here. Markets are starting to break down a little bit more. Double bottom. This is going to be a scalp right here and right here as well. These are your areas that I would start to look at an intraday scalp trade. I would not be looking at any level before then. Again, these levels right down here will be good. If we take those out, you actually could head all the way down to this little level right down here at around 133 even number, which would be another fantastic scalping level. All right, guys, enough said for today. Hope to see you in the Research Center. Hope to see you in the Intraday Stock Chat. And again, let's continue to profit no matter what the market does. We're here to always make money with you guys. Take care.